Hey traders, Ethan Roberts from Mastering TQQQ Trading here. Today I want to talk to you about a very important subject of what's going on right now with oil, war, and TQQQ. And maybe we can look at what traders can do right now. Stay tuned. Well, this is the chart of TQQQ going all the way back to the end of January, and the one thing that I notice is that we're going through a series of lower lows and lower highs, and we've been in a falling pattern, and it's gotten worse, of course, since this war with Iran began. So it's been very difficult, especially for traders that are holding long positions. Maybe if you're using covered calls, you might be generating some income to offset the losses, but in general, your portfolios are probably pretty far down right now. Year to date, the QQQ, the Nasdaq 100, is down 5.25%, and it's about 9.91% off its January 29th high of $636.60. Now, since TQQQ is 3 times the leverage of QQQ, you would think that it would be down like 15.75%, but no, it's actually down 18.27%, because don't forget we have decay on these leveraged ETFs. And we're down 13.3% since March 1st and 28.89% since its all-time split-adjusted high of $60.59 on October 29th of last year. That is a long way to come down. Now, year to date, you may think, well, some of these Mag 7s and these more popular Nasdaq 100 stocks might be doing well despite TQQQ being down, but let's look at some of these. Tesla's down over 18%, Amazon down 11%, Meta down 10%, Apple down 8.78%, and Nvidia, the champion of the QQQ, is actually down 7.28%. So they have not fared well either. Now, the problem is, since the war against Iran began, we've had a surge in the price of Brent crude oil. And you can see, looking at the circle in the chart here, we were actually starting to come up anyway as we started rolling into February. The market anticipates things in advance, and perhaps they knew that war was coming with Iran. But look at what has happened since March. We've gone almost parabolic straight up, and we've gone from about $60 a barrel up to $112 a barrel. And that, of course, has put a lot of pressure on the markets. Now, why is that? Well, high oil prices equal inflation. Did you know that about 70 to 90% of all U.S. products depend on diesel fuel for delivery? Trucks, in particular, move 72.2% of the nation's freight by weight. So in January, the price of diesel fuel was nationwide about $3.52 a gallon, started going a little higher in February. The March reports have yet to come out because we're still in the middle of the month, but reports have surfaced that we're seeing $5 a gallon and up on the price of diesel fuel right now. So of course, that's going to contribute to inflation. Now, what are inflation's effects upon the Nasdaq 100 or QQQ? Well, the QQQ has an inverse relationship with high inflation. In other words, when inflation goes up, QQQ goes down and vice versa. Growth stocks need low interest rates for borrowing money, and inflation makes interest rates rise. I'm sure you remember what happened in 2022 when the interest rates were rising like crazy because we were having all of that inflation. Well, you know, the 10-year T-bond has now moved up from 3.936 in the third week of October of last year, and as of this past Friday, it was at 4.386%. So there's a lot of fear growing in the market right now that the Fed rate cuts are going to be completely off the table for 2026, after we were told by Jerome Powell that there would be at least one and possibly more coming down the line. Now, how long can this war with Iran go on? Well, that depends on many factors. We have ground troops that may or may not go there. We have what the Iranian leaders choose to do. What does President Trump choose to do? Are we going to get any cooperation from NATO or the European leaders on the Strait Hormuz? You know, what happens with the Strait if the oil goes through or it doesn't go through? Now, some people have said it could last for several months, and others say no, it'll probably just be a couple of weeks and then it'll be over. But I will tell you this, unless something changes, TQQQ is likely to continue its decline. So what should TQQQ traders do now? Well, if you're a long-term hold investor, you have several options. You can just continue to hold your shares and hope that this war ends and that we get a bounce back. You could sell out of the money covered calls. The problem with doing that is you may get called away with a big loss. You know, you'll get some income to offset it, but you know, if you're down 15 or 20%, it's not going to really help you to sell covered calls that are just a couple of dollars above the present price. You could also sell shares on any short-term uptrend that we get, but again, that's going to put you in a loss. The idea is, though, maybe it's going to go down a lot further. We just don't know at this point. Now, if you're a day trader, you should consider scalp trading, which is just where you're trading for a couple of minutes at a time, trying to get 20 or 30 cents out of TQQQ and then closing your position. Swing traders, make sure you wait for extremely oversold conditions on indicators such as the stochastic oscillator or the RSI-2 on longer term charts and the RSI-14 on the daily charts, and that'll tell you the best times to get in. Option traders, you may want to consider selling cash secured puts far out of the money and for several weeks out. If you want to, you could also buy at the money puts, but right now I think you're best off using tight stop loss orders, because after all, we have been going down for quite a while now and we are due for a bounce back. And for all traders, just consider staying in cash for now. You know, cash is a trade also. Okay, maybe you're only getting 3 or 4% on your money, but it's better than losing. Now the question arises, should you buy SQQQ? And of course, SQQQ is the opposite of TQQQ in that it shorts the Nasdaq 100 or the QQQ by a margin of 3. Now, people know that when the Nasdaq 100 drops, that SQQQ goes up. And you can see this is the 10-day chart right here of SQQQ, and it's actually been doing very well. But the thing that I'm seeing is the stochastic has already started turning down, and so has the RSI, and both of these are in overbought conditions. And given that we saw so much selling this past week, it would not surprise me to see TQQQ turn around this week. So buying SQQQ at this juncture could be very risky. Also, if we look at the track record of SQQQ, it began in February of 2010, and the total return since then is a negative 99.99%. Okay, well, you say, well, why has that happened? You know, why isn't it just pennies to buy it now? Well, that's because they've done inverse splits so many times 2012, 14, 17, 19, 20, 22, 24, and last November 25, they've done 1 for 4 and even 1 for 5 ratio inverse splits, which means all they keep doing is every time it gets down to a very low price, they do one of these inverse splits and boom, it pops back up to a higher price. But of course, you're going to get fewer shares. So a starting investment in 2010, if you had bought SQQQ and you were holding it all this time, you would now have, are you ready? $1.03 would be all you'd have left of your $10,000. So when I tell you that I don't recommend SQQQ, but if you are going to do it, just buy it for day trading only and get out when you have a profit. So summing it all up, of course, TQQQ is very volatile. You may know that the beta on it is 3.4, and it's quite risky right now with everything that's going on. The rise in oil prices from the U.S.-Iran conflict is wrecking the Nasdaq 100 right now, and TQQQ is 3 times whatever the Nasdaq 100 or the QQQ does. So if we go down 2%, in the QQQ, we're going to lose 6% on TQQQ, and that's about what happened on Friday. You need to have a plan on how to trade or simply how not to trade TQQQ right now. And waiting on the sidelines with cash is a good option, but any positive news on the war can make TQQQ rise very quickly. So make sure that you're nimble and you can jump back in if we do get some very positive headlines, because this ETF can rebound faster than just about anything else on the market. And if this war comes to an end or the price of oil should decline by quite a bit, you're going to see it pop up very fast. It's extremely oversold at this point at just about $43 a share. Well, I hope you liked this video, and remember, please hit the like and subscribe buttons for the Mastering TQQQ trading channel. And if you'd like a free copy of my daily Mastering TQQQ trading newsletter, please just put the words free copy into the comments. I will send you a free copy plus a sign-up page. So if you like what you see and you wish to subscribe, that will be very easy. Until we meet again, this is Ethan Roberts for TQQQ Trading saying, have a great TQQQ trading day.